What's up, very good morning. Welcome to the stream. Chat. My friends, my trading friends. Here to share the bounty of awesomeness. You know how it goes. Ready to crush it today? Let's do it. All right, what's up? Good morning. Okay, we got Jolts in about half an hour. A big moving day. Market's been trying to find a way to introduce some volatility and selling, but like still, you know, as we called last couple of weeks, so this market just goes up, keeps going up. Yo, good morning. What's up, chat? What's up, stream? Fellow warriors in chat right now. They made today big victorious. YouTube, say hello. Friends in Zoom, head over to YouTube, say hello, give it a like, give it some love. You can keep out the maps. Should be check them out today. All right, let's get going. Let's go and move this out of the way here. Okay, S&P has a 58.33 top level red line. 58.30. What was it? 58 what? 58.33. All right. 58.33. Oh, it's right here. It's guys, it's like right here. 58.33. Chat, look. Right here. All right, let's get the dynamics going. $5,800, $5,800, $5,800 across the board. All right. Okay, that's it. One level today. That makes it easy. Jolt's coming up in a couple minutes here. Or it's like the next 25 minutes, I guess. Something like that. 35 minutes. Q's 246. All right, that's right here. These are from our Discord here. 39. That's way down here. Keep in mind today, Bix above triple B. Our greater market is down one of the four things. Volatility is a thing. Overshoots are a thing. Overshooting pivots are a thing. We don't have that golden month that we thought we were going to have. As of right now, we have that kind of... remember, the golden month was every dip's going to get bought. And it has been correct. This is exactly what's happened. Every dip's been bought. Every dip's been bought. Every dip's been bought. I've been trading the whole way for the whole month's going to be just like that. This guy needs to get below here, though, for that to continue. So we got to watch this level 18.3 on the VIX futures. That's it. Thinking of shorting today? Oh, no. Here's a question. Do I ever wake up and think about shorting? Absolutely not. I never wake up and think about shorting the market. Never once. The market will tell me when to short it. That's the best part about shorting. The market will always let you know. You never wake up and tell yourself, I'm going to short this market today. It is so easy to short the market. It's so easy. You just don't do it. And when you do it, it's so obvious, it rarely does not work. at least in our style. Our shorting triggers are about a 90% under the best conditions. Success rate. Now again, these are MHP reversal shorts. It is one of the most solid trade setups that we have in our arsenal. I just do that. I don't short anything else usually, almost ever. That's a good question, man. I love hearing that question. Under normal circumstances, it's roughly 60 to 70% probability. Under the best circumstances, 90%. We talk about that in our Zoom call. One of my best setups that I've got. Let's look at liquidity maps. Get those guys come in real quick. S&P today belong up. Let's check it out. But yeah, good question. I wake up, the market will tell me short today. Today, not a short setup. Today we have bull zone, hedge pressure lining up right here. Wait, that's not the right. Hold on. Hold on. Hold on. That looks like yesterday's data. I'm connected here. Okay, here we go. QQQ. All right, bulls on bottom. Scalp here to here. That's my first trade on that. Qs are pretty decent. Okay. What is? Let's get this coming through here. There we go. I was like, that's more like it. Okay. Okay. Bulls on bottom spy. All right, let's watch this today. Dang, right there on the edge there. All right. That bull's on that overshoot. Right here. That's a hard one because we did lose bull zone, so. Up and blue open, We bet that we stay on the blue side. Let's watch it on here again. This is an issue if we do break hedge pressure, so I'm just right on the edge here. Usually bet on bull side hold, but this is not. I'm not super confident in this one, so I'm just hitting at something small. Give me 1 second. VIX. Really good VIX today. Let me get my setup done here. Save my layout. Let's get that going. Now again, I'm looking for here test to there. I don't know if I like that. That's a tough one. On the break, yeah. This is pretty quick. So interesting to see this trying to sell. Overshooting the pivot here to here is back on the scalp from bear zone to bull zone. I might be able to break even on this one, so I'm gonna hang on to that one. But man, this is tough. So anything about 571 or later, I'm probably gonna pull this. It's about a 1-to-1 setup on this one. This isn't a good setup for a big long today. Dropping here, bull side here to here is a test. I'm gonna hang on to this one. It's probably gonna kiss that in just a second, but that was an unusual. Let me get my layout going on here. I need to reload out some of my layout, my full layout here. Since we're on the new Rocket Place forum now, or form, not forum, form. I gotta redo all of my settings here. Pop out some charts. QQQ. Y. All right, let me get like 1 or 2 minutes. It should bounce. It should hook back up. But man, this is a icky. Oh, I'm setting my other chart here. Keep my eyes on this. Down about be about 1,000 or 1,500 max on the downside if I lose this one. This is a like I had a pretty decent confidence. I always hit that bull zone every time I touch it, but man. That's a tough one. I don't know if I like it. Yeah, I'll close it out. I don't like it. All right. Usually I hit the bull zone every time. Don't like it. I'm going to stay on the sidelines on this one then. No, it's going to bounce, but it's just going to overshoot a little bit. I don't like the overshoot. Watch. There. Let me look at my settings here. Save layout. Usually when you break bull zone, bear zone, I usually stay away out of this one, but let me go up to here. Down here, DD float right at the bottom. Dang. Okay. This is good. This is good. This is what I want to see. There's no evidence that this is going to short and sell off, but if it does, it does. We have MHP break on Q, so that's really a big one. So normally I don't ever wake up and want to short the market. It'll tell you if it's a good time to short. Sometimes random stuff like this is hard to predict, so like I said, I'm not going to touch it. Just one little trade didn't play out. It's probably my first losing the account in a while. But what I'm going to do is I'm going to hit it right on bull zone bottom on Qs with a small trade. This is highly unusual. It's rare to see that happen, so. Yeah, completely. This one move. Sell off foreshadowing the news in about 10 minutes. Yeah, wave jolts coming out, so this could be getting out of the wave jolts. Multi-hedge pressure breaks, markets become irrational, so any tap of MHP here is that sell signal we look for. So watch this. So today, This sitting here as a reversal signal is likely a trade to take. So this actually might be a sell-off day from here. So what I did was I bought on SPY to bet on the bounce, and we lost the bounce. I'm going to get out of the way. So today is likely a reversal signal on this one. Yeah, it could be a big selling day today. So let's let it move. The S&P has broken key level. VIX has broken key level. We know that, so we step aside. I'm going to abandon my long thesis today. This was kind of weird. That's unusual. We don't normally see days that open up like this. So today, right, no bag holding on the long side. Took my little trade, didn't like it. Market's completely irrational today, so let's let it do its thing. All right, it's fine. All right. So randomness aside, this is going to be, so for the jolts to come out, I got 20 minutes on that. This was very interesting to watch. Such a drastic move. It's making me curious. Did I like sleep on some news last night? Hold on. Going on in like China and stuff. Is it the port strike today? Oh, you know what? That's right. Probably would have a Iran news. The Iran prepping ballistic missile attack against Israel. Okay, that's in the news right now. Yeah. So this is yeah, it's again highly unusual. Let me tell you the probability that this right here. So under normal conditions, which is what we had, there's roughly a 90, actually like less than 90 because we had lost the VIX, but between a 70 and 90% chance under all ideal conditions that we ended up at this bull zone. This is one of our stronger positions. Losing hedge pressure on VIX though kind of lowers this, so we're closer to like the 60 to 70% range. We end up back up at the same zone from here to there. So on these breaks, I usually don't. I don't like to take the odds on this one. And QQQ being the culprit today, that's really causing the market to kind of be damned. QQQ losing bull zone so quick and losing monthly hedge pressure markets completely what we call irrational. So here on that pivot is the key pivot today, 485. So normally the way the setup goes is this is a short entry to trade back down to lower DD band on Nasdaq. So this is actually a confirmed short entry, and I might not take it because I don't like to usually chase them. Oh, we already touched it. Okay, so here's the problem. Weird setup day. Okay, so we're going to have two things to deal with, and let's watch Nasdaq because this is the key today. Here to here is a scalp, so the scalp from here to here is definitely worth touching. To MHP, but then from there, the signal usually is a reversal, so be careful. From MHP, there's usually a reversal signal on that. The rare case would be to break back up. Expected it's down here. The thing is with risk management, if something happens super quickly, like just then, I know my risk. I wasn't confident, so I only hit it small. $1,000, not a big deal. That's my normal small. So my normal's like $1,000 trades. My medium's like 5. My big is like 10,000. So when I'm up and down like 1,000, I'm just putting pennies on the table. Are the odds of bull zone holds first 15 minutes? So if all your statistics are good, all your market is not irrational. These lights are green and yellow. It's upwards of 90% on the bull side. Everything lines up. It's about 9 out of 10 times bull zone will hold. 80. We give you all that stat in our Zoom calls. Iran news came out just now. That's a new thing. So news, yeah, market's freaking out on the news. I don't think that's going to sell off the market today, but we need to be very careful. Here, I don't trade outside of these green bands. This is no trade. I sit out. Down here, sit out. So my rules are outside these bands, I don't trade. About 8% of days close below here. And of the ones that go outside the band, a third of them reverse. So kind of like sit out day. And if the market just sells off hard today, let it. The best part about being a trader is you can let it shit on itself and you can sit back and watch. So the idea is I'm not going to take any extraordinary amount of risk today. We have VIX hedge pressure break. Everything a little crazy out the door. Jolt's coming out in about 10 minutes, 15 minutes. Baby, I hate when I just take a weird loss. But again, market's acting funny. This is a possible long setup from here to here. But market irrational like this. Now we're taking. So did I hear that Elite Trader Funding is having a 85% off on the non-fast track sale? 85% off today. What's up, Zoom friends? Hey, everybody in Zoom, can you do me a favor? Can you go to YouTube and hit that like button? Everybody like YouTube. Hit that like button real quick. Okay. Sit out. Delaware MHP, DD band break, market irrational, man. That Iran news is gonna be crazy. So what we're gonna do is let this market play. So this is not something. This is a catalyzed news event. So this is a catalyst, you guys. Let me show you how to look at this. So these are the rare days where you have these sort of moves. So like the market's gonna die off for a hot minute, let it die off. So what the best part about it is you don't have to touch it. Again, you can do whatever you want with your money, but I took a long. Didn't work out. I get out of the way and look at this. I'm not sitting here bag holding this crap as it falls. A master trader knows when to get the fuck out of the way. Let the market be destabilized on just weird news, right? You don't have to play it. Yeah, some are the dump days. It's moving really just. I think it's moving on the Iran news. So, let it do its thing today. Market's just looking for any reason to try to be bearish, but the market's not bearish in structure. Today we're breaking everything, so let's just kind of like let it do its thing. Okay, guys, you know how this game is played right here. Ready? There it is. Right, we do the impacts there. Do a run linked here. I'm quick to make a decision. If I don't like what I see, I get out of the way super quick. I don't get in here and over gamble. There's a trick to make money in this market. You guys want to know the secret? I want to. Do y'all? Who here on YouTube wants to know the secret to making money as a trader? I'm gonna tell you. It's so easy when I tell you this to realize this, and there's one trick to make money consistently. One thing you got to do that you're not doing. Oh, another trick. Oops. There we go. Here's the trick. You don't lose money as a trader. Stop losing money. The only way to make money is to not lose it. That's it. That's the hard part. At least if you're not losing it, then it's easy to make it. But the hard part is learning how to not lose it. That takes you a lifetime to master. But one of the best tricks I can teach you is when the market does something weird and breaks structures, get out of the way and let it be confusing and weird day. Right now, your gurus that are trading out there are going to be trying to coin flip this. Half of them are going to win and post a big win. Half of them are going to lose. Avoid posting anything. Market's taking a dump, and I'm not taking a big haircut. I know when it's over. Trade less and make more, as Peter had said. That's a good idea. So the market's taking a dump. Not bag holding. You know, see me just hemorrhaging my accounts. Everything's flat right now. I took a stab at what the start of the day was a 90 percentile. Weird news. Kicked us lower. I'm out. I'm done. So let me show you where the levels are, the key levels that are broken. Number one, under all conditions, about 60 to 70%, it's about 66%, this usually holds under all conditions. So under ideal conditions, it's closer to 90. This morning, we had one notch, not ideal. And then we had news. So the rare thing happened today. Okay, usually take a long here, didn't pan out. Cut out right here. So that was about what? Geez, 20 points ago. Now I say hemorrhaging as the market's falling, right? So I know when the market's doing what it shouldn't do. I long here with the 1 point stop. You guys know me. And SPY. Long futures, cut there. That's pretty simple. Get out of the way, and it's down another 20. See, I know when to cut and run. I've got all the signals in front of me to keep me safe. That's it. So you might say, oh, well, you missed out on the short. I didn't miss out on shit. I don't ever miss out on anything. This is not a short setup market. This is a blast up on a news event, right? So another key factor, Nasdaq should have held this. There's a stop on Nasdaq. Breaking MHP, the market destabilizes, becomes irrational. This is a gamma squeeze on the downside. This is going to squeeze a lot of people today. We're also breaking DD bands on Nasdaq. This is a classic let it sit out day. Follow Nancy Pelosi. Yeah, that also works. Guaranteed way to. All right. Jolts in 7 minutes. So with the jolts really quick. Jolts are going to help us understand more about the Fed. As we were saying all year, the Fed is pretty transparent on what they want to do. So the jolts typically used to be a predictor into what the Fed was doing. And actually PMI is coming out as well. So manufacturing prices will kind of bake into what the expectation of inflation is. A lot of this pre-selling could be leaked ISM data. You never know. The expectation is coming in pretty hot. So 53.5. See what the actual is going to come out as. The jolts have been in continuous decline, which means basically there's not as many job openings as there used to be. Typically that comes from hiring spree, but we're watching the continuing jobless claims and all that. They're pretty much stable. So it's not like a bunch of unemployed people are magically getting thrown jobs. We're just basically having jobs being filled faster than jobs are being created. So this is a stagnant point, the jobs growth. The one part of the news that's like decent but not amazing, like you'd want to see unemployment numbers just like sharply decline while this is coming down. So this is just like stabilization. And this is normal in a bull market, but you want to see the other things come down too. You know, obviously we had that huge amount of jobs in open jobs because of COVID. When I say it's normal, this is back to normal, right? 8 million. This is pretty much still along the growth path of a good, healthy economy. We're just in decline from all the people, you know, all the jobs in COVID finally getting filled back up. So we want to see hiring spree, obviously, to show like that growth in the economy. But if jolts come in with a bunch of available jobs, it's going to be decent, right? You want to see the number coming down just to show that people aren't getting, you know, that the jobs are still being filled. The all-time highs, you can't assume that the jobs are being eliminated because of efficiency or whatever. But you never know. I guess I'm stripe really quick. Crazy time today. So let's let that news come out. Let's see what happens. Honestly, I don't see any really good setups on QQQ here to there to test. But here today, this is going to be a weird day, especially if this breaks a second time on the news. But this is a resistance on any normal structure break. So whatever happens here today, there's a setup right there. Isn't that crazy? A beta squeeze. Yeah. Isn't that crazy, you guys? So everybody in Zoom, right? We have a huge crew in our Zoom call. Those of you here on YouTube, we have a live Zoom call. It is actually live. This YouTube is like 20 seconds, 30 seconds delayed, something like that. But everybody in Zoom, we have a huge crew there. And that's where you need to be. You want to check out what it is we do. Yeah. So we all know, as we teach this, when you flip from one side of monthly hedge pressure to the other, that shouldn't normally happen. So when it does happen, the market is giving you like glaring signs to just like, champs, this is how you champ. You champ the right way. Not every hand is a good hand. This is a terrible hand. This is a terrible setup. Trying to guess anything from here, you're committing suicide in your trading account. I know it's not the sexiest thing in the world to sit back and not do anything, but it's sexy to not lose money when market's doing the weird thing. When structure breaks, just walk away. It's easy as that. Trade less. You broke and even look back. Yeah. So resistance here, and it would be weird for it to break and keep going. But news on top of news, you know, who knows what happens from here. I've been looking for a big awesome sell-off day or two so I can get right back in on the long side of the market. Take a look. ED band is broken here. What's great about the market is that, you know, big nasty days that can collapse for like a day or two. I can kind of see them coming from a mile away. For the most part. Bull zone break, hedge pressure break. These are like gamma squeeze indicators. You don't want to mess with that kind of stuff. So here's S&P, right? I grabbed it. I closed it, and look what it's done since I've closed it. Like, you know, what's even awesome is that even when you pick the wrong side, you know you're wrong. It's so easy to just choose to stay away from it. Now, this market is, there's an 88% of days will close inside of here. We know how this works. This is statistically. Jolts are out. All right, let's go. Market's moving. 88% of days you close back inside the bands. All right, this is a non-event. The jolts have gone up. They've come down. We're sitting pretty right in the same spot. Let's read what the data is. PMI's also come out. This is what we got here. Construction spending is down a little bit. PMI is a slight beat. That's from this. Oh, that's from this morning. Sorry. Can't even read here. Manufacturing employment slightly down. PMI slightly down. Prices way down. And jolts were huge. Okay, that's a huge hit on jolts. That's good. I mean, huge opening of jobs. Now, that's interesting to see if is that. We'll have to see what the Thursday numbers come out to see if those are layoffs or not. Uh, 8.04 is, it's not crazy big. It's in the realm of noise. So I would say that's a muted response. Nothing too big here. Slight miss. Prices are coming down, which is good on the ISM side. Where'd that numbers go? It's great to see that number coming down. You have periods of high inflation post-COVID, and you know, being below 50 is always a good sign of good prosperity, right? You like to see it kind of lowering. This is periods of inflation on manufacturing prices. So prices are coming down. All right, so this is a non-event on jolts and PMI. Market moved up, came right back to where it started. No effect. It seems like we're just panicking on the Iran news, so that's it. I don't know, because QQQ has lost a second bull zone. This is scary today. I wouldn't be long in this. We're outside of DD bands. It's scary to lose a second bull zone. So it's not that stable right now. So the neat thing that you understand, the severity when okay. So when the rare thing happens, usually the severity is high. So that's exactly what we wanted to see both of these things hold. Losing a second bull zone support, not good on Nasdaq. IWM really has no support coming through here either. We got nothing for a while. So on the downside, IWM doesn't have support until there. Now again, it's not a short signal setup. Today's a one-day flush day. Like I said, let it flush. 88% of days will end up closing inside of these green bands here. Not saying that that's the probability that this will happen, but it is an 8% chance that we end up, that of all days that we've counted, about 8% of days end up down here. 88% of days end up there. So the majority of these will likely go higher, but on this one, QQQ is the only one with a foreseeable target and support. SPY has really nothing but a bear zone top, which is about 20 points away. So today we've got roughly 20 points of chop. Yes. And we know she's not tradable, so stay away. Love it. Love it. Even the market's crazy, crazy town. We notice to stay away. It'd be smart. I don't make my money go out there being maverick on stupid days like this. Let it be. All you gotta do, let it be. All right. Like I said, rare things, let it happen, let it fall. Take it easy. Very surprised CDD not move, like nothing right now. Like let's just let the market just do its thing today. It's great. We know, we see it, right? We saw it back here, and we get, and this is going to be a great talking point for today. I mean, we get signals in the long setup that's worked. Geez, for the last like 2 weeks, day after day after day after day. Buy the dip, buy the dip, buy the dip, buy the dip, and today's the one day it didn't work. So the rarities are, you know, we know where all the signals point out. The 4 greater market signals are bullish. They have been bullish. DD ratio greater than half. That's one. Number 2, S&P above its monthly hedge pressure. This is gamma balance on the market maker side. Number 3, VIX futures, less than triple B. And that was good for a little bit at the start of the month. Right now, that was broken yesterday. Or last week. Now monthly maps on the index, bullish or bearish. Let's review. Listen. Champions they don't win every time. Give me a champ. It's all about managing your losses. That's the secret to this. SPY still bullish, monthly map. This slipping down is still bull market. This slipping down is still a short squeeze. May not be today, but remember, every big flush day within a day or two is a recovery day in strong bull markets. Now, Nasdaq is starting to build some illiquidity pockets, as we see right here. Some big volatility possible in the Nasdaq, so just be careful on that. Where we are here, Nasdaq has some resistances built in there. So we'll see if that clears up. That's about a week away. But in general, it's still bullish, right? So let's let today be a flush day and then let tomorrow and the next day recover it all. This type of environment loves to do that. So I'm going to let it go. Monthly maps, decent. So about one of the 3 greater market signals is not like roaring bull market again. Let's see what IWM looks like. I'll tell you. Stay out of the way, let it fall. Let me ask everyone in chat. So let's do a poll. Chat. Who's sitting out today? Everyone, YouTube, who's sitting out today? Zoom, who's sitting out today? The absolute most successful traders win about 45% of the time. Win rate is almost meaningless. Risk management, knowing when you have the edge is the only thing that matters. There you go. That's it. That's it. That's the best thing I ever heard. So listen to your like technical analysis gurus out there telling you they got a system that's gonna give you an edge. The only edge you get as a trader is the edge that comes from risk management. That's it. Knowing when your edge exists and knowing when it doesn't, knowing when to sit out. Powerful words, baby. Powerful words. Powerful words. Look, I'm not buying the dip. I'm not touching. Let the market shit on itself today. Sometimes you just know, like we have the ability to tell you when the market's collapsing, and I can tell you straight up, I knew that 20 minutes ago. But I don't normally chase bear setups. I don't have a setup that I chase on that. Let me start bear setup. I don't chase crash setups. I bought here expecting this to move to there. I took a loss right there. Because I knew I'm way, and that happens, I know I'm way wrong on this. And look what it's done since then. 40 points lower. I'm not baggling. Dude, in bull markets, this is how you survive. You just know and you get out of the way. Out of the way, out of the way, out of the way. Aim that ego. I'm happy whenever I can see something and I'm safely on the sideline. Like I'm watching a burning building that I escaped from quickly. I saw a little bit of smoke in the corner of the room. I shouted fire. People laughed. And I walked out of the way. I only got a couple scrapes on the way out. So that's sometimes what you got to do. You know what? And what I normally do is I just close out my platform and go have fun for the day. Taking one micro trading queue, especially an ATR 55 5-minute trade. Yeah, this is huge in a 5-minute trade. Marie says, I want to thank you and Roxy for all your prep talks. I'm telling you, well, I thank you guys for being here. We try really hard to like prep people for understanding what is. Like when you have a style and a system and there's an edge that you look for, you know when your edge doesn't apply, or you know the conditions that you apply your edge to, right? You're not going to win all of your trades. You're going to lose a lot of trades. But the best part is you keep your losses small. And today, loss was super small. Super small. And it could have been much worse. And so when you start to learn that take a stab doesn't work, that's the trick. And over time, that adds up. That less of a loss adds up to hopefully making more shot hemorrhaging around. You're not, I didn't sit here in $1,000. It's nothing, right? On the worst day we've had in the last 3 weeks, I'm happy that it was that much. I got in, I saw it quick, I got out. And so you guys help learn how to do that. I'm like George Costanza knocking people out of the way. Get out of the way. World record risk management when you lose. Joe said, that's it. World record risk management. When you lose small. And then you know, right, when your system or your edge is falling apart. And that's what we said is like, we've just completely fallen apart. We've lost three key pivots that shouldn't have lost, right? The odds of this are astoundingly low. Like, this should have bounced. This should have bounced. That should have bounced. And on the first one, when I got out of the way on S&P, get out of the way. You lose MHP, you 100% get out of the way. You could have avoided this. So who here has not... Let me just ask a question. Everybody in Zoom, can you go to YouTube and type really quick? I want to see some numbers on YouTube. Well, you guys in YouTube, hit that like button. Give us some love. Type in YouTube. What have you done here? I want you to type one of two things. Did you not long below MHP? Are you trained very well? Because I didn't tell you what to do today. We weren't even looking at cues. Did you not long? Did you short? Small loss. I want to know what everybody did. Just be honest. Just be cool. I want to take a poll. But type it in YouTube. I want the YouTubers to see. Also, Brian Parrish out. Brian, you cautious like me, dude. I love it. Just sit out. Just set it. Just walk away. So small loss. Got out of the way. Did nothing. Did nothing. You took a long. Took a long and got out of the way. Is anybody here, again, I can't advise you on your position. Is anybody here still long? Holding? Or did you long and get out of the way? Oh, and Zoom, people are typing in Zoom here. Somebody said didn't get out of the way. That sucks. That's why when you're trading, you can't ever lose your guard. You have to set your stop and get out of the way if you don't like what you see. Traded pre-market long of MHP. Andrew, nice. Took a long break even. Long at MHP and got out of the way. Okay. $7 got out, walked away. So the neat thing is that this is what I like to hear. The day the stock market's collapsing on itself, I don't see anybody here saying they're blowing up their account, right? This unless they're just being silent and shy about it. But it seems like you guys have been listening to what we teach. You get the signal when the rare things are happening. Don't ever cross your fingers and hope. Learn to push the button to get out. Learn to be okay taking a small loss. A lot of times I've lost enough money over the years getting to where I am to tell you, when you lose a big amount, the only thing you're thinking is, man, I wish it was a small amount, right? And so the idea is that when you're losing a small amount in real time, don't tell yourself, oh, it's a loss. Maybe I can turn this to a win. Think ahead and say, oh God, thank God it's not 20K. It's only 1K. How do I continue to hold this where I got out? Shit, I had 2 contracts. Where did I close out? About like right here. I think it was like right here where I closed out. It's 40 points lower. That's 1,000. That would have been now 5,000 on two contracts. I had a bag hold. I would have lost $5,000. But for me, the best thing about the rocket scooter is when one thing falls apart. Look, a lot of times everything can fall apart, and I can see that shit from a mile away. I'm in. I go, no way, I'm done. And we try to teach you guys to see that. Is that once you get that, oh, my confidence is blown, be quick to cut and run. And that's a great lesson. I love them streaming. You guys could watch me take a tiny little loss being on the wrong side of the market, and then I know the market's falling apart. It's completely irrational, not tradable. IWM doesn't have a support until 215, by the way, so it can keep falling on that side too. So Abe Krenza, you're down $200. That's it. Rocksteer is great for risk management. You know it. So John Rad took a long. Peter, $7 got out of the way. Chase, no way, nothing yet. Nothing yet. Chris, Maz G, Scalp taking on price action. Somebody lost $250. Somebody sold at 58.21. Damn, that's a lucky you. Mike, somebody took a long. Said I'll completely sit out. So the thing is that the rare thing is the market shorts and collapses, but it's like you see a lot of people here taking a peck, getting out of the way. Because the last 3 weeks we've been buying dips, right? It's been working pretty well. And today I bought a dip, didn't work. Walk away. Your fingers screaming short. On MHP breaks, our rule is if you come to the Zoom calls, there is a rule to take a short. You can on MHP break, you can always take the reversal trade on the break. If it was to return and tap there, I would have shorted it. Small trade, yeah, always, but I didn't do it. Why does Stream Elements just like dump all those messages all at once? Okay, got some news coming for you guys. Some new developments coming out. We're creating a hedge pressure, resilience, and we're modifying the hedge pressure. But we've never done this. We'll be modifying hedge pressure equation slightly so that we can improve its accuracy. There's something I've been working on for a while, and we're gonna get a release, and we're gonna test it out for a little bit. I'm usually quiet about the things I'm working on. Here. So hedge pressure, the blue line, is going to get a modification. I can't tell you what we're modifying, but I have an idea. It'll hopefully make the calculation we're talking about like 1 to 5% error, give or take. So the idea is that hedge pressure is usually a balance of strikes, right? So it's at a strike. So if it's in between two strikes, you see how it's a whole number every time. We move it to the most likely strike of the balance point because that's the important part for options. The idea is that if you're in between two, and you're like in the middle, it'll move to one or the other. So the idea is that it's going to refine the actual equation so that it'll round correctly more often than not. Sometimes it might round to the higher or the lower, depending on which one's the most likely candidate for hedge pressure, because it goes to the nearest strike that it qualifies. So this is pre-rounding or pre-adjusting calculation that should make the accuracy about like 5% more accurate, because we discovered something new that we want to include that we think can refine the calculation a little further, which really may have some effect on the output, may not. Some days it might, if you compare the two, some days it might be one strike apart from what it would normally present on the old version. So probably in about a week or so, I can get the test version of that so I can see if there's a difference. The news event was there. Iran is prepping a missile strike right now. And this always makes the market go crazy. So with that, the idea is that we're going to do hedge pressure resilience. We want hedge pressure itself to be as further or like as fully accurate as possible. There's a little bit of consolation we've taken on certain parameters inside the model that we're now going to rigorously calculate rather than just loosely calculate. So with the rigorous calculation, we believe that hedge pressure can get about 5% more accurate. Give or take. Why not? Why make it more of a band and line indicator? We've discussed that before. And the reason we make it a band with the dynamics because it's unknown. Open interest is unknown overnight. But in the morning, since everything is fully known, we find the most accurate candidate to be the maximum gamma. So we know where the maximum gamma is. So imagine like this, right? And we look at each strike. The maximum gamma of dealer-to-dealer options. So each strike is going to have a number, right? I'm gonna make up some number. I'm gonna write it quick. 1, 3, 2, 5, 4. And so we go, aha, this is the strike. It's not whole numbers, but you get the picture. That's the one. This is the guy. That's the maximum. So the thing would be is if the number was like at this strike, this is the highest number. The reason we don't make it a range because that strike is, each strike has its own number where the highest is the highest. So when it's 100% known, we know. It's a good question though, Andrew. So rounding would be like, the example is within a tolerance that hold on, I'm watching this. We bet the correlation says that, forget that there's whole numbers at each strike because that's not really what it is. I'm trying to demonstrate it without telling you what it's doing. But say that the strikes are like, you know, 300, 301, 302, 303, 304. Okay. So number one is we know where the gamma is at each place, but there's more to it. We calculate where the risk is actually balanced. So if it says the risk is actually balanced here, and like the previous example, the gamma is the highest, and we say, okay, you know, it's inside of here, and it's more likely to be at this strike. So the idea is that the correlation is going to be shifted to account for like a little bit of deviation inside of here, which sometimes may kick it to there instead of here. Because the strike is where the gamma is the highest for that particular strike, because that's where the market is, delta's half and the order flow is the highest. So a strike itself is what matters, because that's where the highest order flow always takes place at some strike. So we're trying to identify the strike that is the highest order flow. Our calculation gives a whole number. I mean, doesn't give a whole number. It gives a real number in between two strikes. So the idea is that we want to isolate that one spot is. So, and you'll notice the same thing. So it's because options are discretely, they have discrete whole number intervals between them. Even though your risk may be balanced somewhere around them, your risk goes to 100% once the option's in the money. So the idea is that if this is a call, and no matter where your risk is, anywhere down in here, you have no obligation to have anything. You may be somewhat delta hedged, but you don't have anything. But crossing this line, you need to 100% be risk on, because you can be exercised on at any point in time. You owe 100 shares to the buyer of the call. So the idea is from here to here, there's a degree that people either go from 0 to some kind of risk, which is where they are here, to either some kind of new risk to 100. So because people will rapidly shift when just crossing this threshold, whether they go fully hedged or some degree of hedging, there's order flows maximized at a strike. Many people that don't have anything may go at full 100. Many people that are hedged 40 may go to 60. You never know. A little bit of delta hedging. The idea is the bulk of everybody will add to their position here faster than they'll add their position anywhere else. So the going to the strike that matters is the point. Yeah, it's a great question. Because if the whole number is in between two strikes, why not pick both of them? And the idea is you can, and again, you know, like if we come up exactly in the middle between two strikes, we do have a tiebreaker that chooses one over the other. If it's exactly in the middle, there are other factors we look at that go with those options at that strike. My platform offer a free trial. We actually offer a paid trial, but I'm going to tell you, it is worth it to do. If you do the paid trial in 3 days and you don't like it, we'll refund you. Let me show you. Our community is massive, so you'll see a lot of people here. We're in 2 places right now. We're streaming on Zoom. And we're streaming here. Click here, Evergreen. We just wrapped up our 20 days profitability mindset. Today is day 20. It's a 20 days masterclass that goes over everything you need to know. And the people here that have gone through it have said, by far, this is the most important thing we've ever done. We do the probabilities of certain things happening, and that's where most of our style. Let me show you here really quick. Is about finding probabilistic edge with like actual probabilities. And now we've discussed, after years of backtest, the actual numbers. Case in point, right about here today, that was roughly a 70% chance, give or take, that we hold. I took a long. It didn't work. I'm out of the way. On this break, we don't know the probability of this, but normally this is like closer to 90% reversal. We always reverse that yellow line. And when that yellow line does break, second chance, get out of the way. Get out of the way, get out of the way. And the market's just deteriorating because this is a gamma squeeze to the downside. Look at this massive amounts of volume. They're just coming out of nowhere because you're just breaking structure. We can see that, right? This volume is higher than the opening volume. What the fuck? But that's rare. But we know because this is a very unusual event. This is a gamma squeeze that's created to the downside and then just get out of the way. Yeah, Evergreen, check it out. And like I said, 3 days, you're like, I don't know if I like it. Just ask me. We'll reimburse you. We let everybody at least try it out. But the platform, you get your data feeds to go with it. You can set up a futures account if you have one with one of our partner brokers. And then liquidity maps up. What's up? Coast 21. Hello, how are you doing? 2 1-minute compression candles, low declining volume. Try along. Good luck, man. I hope you get it, Chris. Now the question is, do I try to play cleanup? Question is, bro, you need a... This is where the itchy trigger finger comes in. And people go, should I do something today? I'm going to tell you, on blowout days like this, let them blow out. Let today, I don't care. Again, don't listen to me. I'm just some schmuck on the internet, okay? You got the market been doing this for like 2 or 3 weeks, right? These are daily candles, right? Oh, just trickle up, trickle up, trickle up, trickle up, trickle up. And today is like this day, right? This day usually stays that day. As a matter of fact, if this is where we are, it might play around and close out here. So point is that in markets like this, I like to let days like this do their thing. At the very last minute of the day, I'll buy calls for next week. That's what I'm probably going to do. Bet the next week will retrace at least half of that. This is just a single day event. Or in the futures, I'm going to let this sell off, and then tonight I might make a decision. I might throw in a contract or two just tonight off of hedge pressure, the overnight. Let it try to grow back up. At least retrace this. Like normally markets like this will recover ourselves within a day. And that's part of the training we talked about. The Zoom yesterday on maximizing the scanner was fire. Oh, thanks, dude. I'm glad you liked it. Do we teach on how we use our tools that we write? That's all we do. We only teach our tools and we teach risk management. So I got polled everybody here today. See, most people here in this group, we have about 6,000 members. So our Zoom call is massive. Our Zoom has most of our members are in Zoom. So we do YouTube for free just for the group. Yeah, we teach everything. You lost access to your Discord. Sent you a DM. Okay. Thomas, have you moved your membership to the other, to the new site yet? Let today just kind of like sell off, you know? That's what I do. Let it sell off. Don't try to guess. Don't try to predict it. I don't try to pick up a V, grab a falling knife. I just know it's a falling knife. I can walk away on this. Thomas, including Zoom calls. Yeah. Send me a DM. I'll get to you guys. Like I get like hundreds of DMs a day now because everybody's switching to the new site. So I'll get to you. But yeah, if you are a legacy member, I made the announcement. We earlier said we're no longer supporting legacy. So basically here's the story, right? We had our website, and then we created this massive marketplace with all these new features, like courses and downloadables and documents. Like we're trying to move from Discord to it all being on the website. So everything's gonna be on the new website now. Woo. So we originally said, if you're legacy, we'll just let you write out your membership. You won't get any new updates, and that's it. But this last weekend, we changed our mind. We will be terminating your memberships on legacy at some point in the future. I'm going to give you a hint. It's likely the next pay period. Next monthly. Like you got like a month left. Everybody needs to move your membership over to the new site. Monthly members to the new site at that new price. That's it. If you don't, you will wake up one day with your membership canceled, and you'll have to sign up, and it will have to be at the full price. So right now there's a huge discount, right? It's locking in at 111 instead of 199. And we want everybody, that's why the incentive is there. Move to the new site. It's hard to move 6,000 people, I know, but you got to move your membership. We can't like move you because we can't charge you without your authorization. You got to move yourself. So move yourself. How are we going to move? Move your legacy site membership to rocket.place/Matt. You have to go there. The new payment thing, but the courses are going to be there. I'm putting the courses there now. You're going to have so much more fun over there. So much more stuff over there. We spent a year building it. We're going to use it. Oh, yeah, there's the port strike today, too. That's right. Not just the Iran news. Forgot about that. Typically, days like this recover. Like big blowout days like this won't likely recover within a day or two. Not all of it, but at least retrace some of it. So we got to tell everybody you have to move your membership over. Lifetime member, send me a message as well. I'll show you how to transition over. The reason we were like, because the idea is we're developing still on the platform, right? But the platform is hosted on 2 places right now. But we're only building to the new platform. The old platform hasn't got any new updates. They're similar now, but they're deviating rapidly because we're putting in new stuff on the platform, just on the new site. So while other people are like, I'm okay, I like the way that it is. I don't want any of the new updates. I want to keep my stuff here. That did make sense, but then there are also people that are like tech support. Hey, I need to cancel this, or hey, I need to do that. And we can't have our tech support staff split in 2 places. And then we decided as we're building new stuff and our techniques are changing, we don't want half the people to be in the know and half the people to be out of the loop and be like, what's the new technique? It's just like, you know what? Everybody needs to move. We all need to be on the same page. One cohesive team. So it's kind of messy to get to, you know, shuffle 6,000 people, 6,000 accounts to the new site, but we're getting you guys to do it one at a time. We're shouting at y'all every day about it. So now we will discontinue the old membership and your old rate. So whatever rate you locked in, 2022, 2023, you enjoyed it for the time being. You now can only lock in $111. That's the cheapest it can be. And that is the new lowest rate we'll ever have. So you got to lock that in. And that won't change forever. We don't plan on making another website. Promise you that. But you got to move. Everyone's doing it, so. And you'll enjoy it. There's more stuff there. I know it's a little hassle to move your stuff. It only takes about, 2 or 3 minutes to do it. Lifetime member, monthly member, everybody. Got to move y'all over. Discord as a facilitator for like education is kind of weak. I hate that my courses are all paced in Discord like this. So our course format on the site is near. I haven't built everything on the site. I haven't built all my courses inside of it, but I actually was doing it yesterday. So by the end of this week, all the course material will also be on the website. You go to my courses, you'll log in, they'll be right there. You can just access them. The videos will be there, any downloadables, documents, PDFs, pictures, it'll all be there. So it'll be nicer and easier format. Is it a course and the trial? Yeah, it's all in the trial. And that also comes in the Zoom ones. Yeah, this is 100% futures. Everything we do here was built on the futures backbone. So like Nasdaq futures, S&P futures, we look at both of them from we look at all futures from multiple angles. So an example is I'm trading the S&P. I've got S&P targets that I look at on futures side, and then I also have liquidity maps the equity side, and I put them side by side and trade them. So an example with SPY, the liquidity map of what's called, what these letters are here, bear, short, and up, show that the market has downward pressure from this blue line. You can see it's just like this downward pressure from here on that break. Hold on one second. I mean, you can come in. You don't have pants on? Oh, you can't come in if you don't have pants on. I mean, they might like it, but I don't think YouTube will like it. Thanks for the eggs. She ain't got no pants on. She made me breakfast. Let's go see what's waiting. The actual DoorDash and door over here. Hold on. Let's see what we got. Woo! I'm still in my pajamas today. Jeff didn't have pants on. So this is my heart healthy dinner. So you guys might know, or breakfast. You may notice I've been working out 4 or 5 times a day again. Get my cholesterol down, my pressure down. And eating healthy, no more junk. So Evergreen, just to let you know, what we teach is we have 3 major indicators that we look at for futures. One of them is this liquidity map. It's a bundle of indicators. Basically, for equities, we get a read because this is equity options. This is telling me where order flow paths are based on the landscape of the options. This indicator is a bull bear bias meter. Anything above 50%, the majority of stocks are in what's called a bull zone. It's basically an easy way to see it. These are gamma balance levels for order flow. And then this is a gap fill predictor. So like right now, you can see that both of these white lines are negative. It means that the S&P is predispositioned to be down this way rather than up this way. So this little dash line right here is a resistance. And this white line is less than 0. So when you add it all up, you can actually draw a trade plan. So today's setup, use your memory really quick. that blue was supposed to bounce. Like that V shape. And I was trading futures. I was actually trading S&P futures. So I watched S&P futures on one screen. I watched SPY on another screen. So this was the setup I was expecting. When I got in and it didn't happen, I got out of the way. So probabilistically, when things don't happen, I just walk away. But they happen more often than they don't. So if that makes any sense, we teach you those indicators. We teach you risk management. We teach you how much to bet. Since I have a sliding scale, confidence, call it normal, medium, and small. Our new course that you'll have access to, and those of you that are in the Zoom calls have access to, is the liquidity map has been modified with actual letters on them and probabilities of certain things that are happening, like the actual edge, the probability. 90% of the time, 60% of the time, the probabilities are written on there. So today, I talked myself into a small trade, which normally would be a normal, but in long setups, I always go smaller when I have less confidence. We broke triple B, so I took a little bit lower there. And we had lost bull zone on QQQ. I broke MHP on VIX right out the door. So I was like, you know what? I'll take a stab at it anyways. I'll just go small. And the risk was high, so my bet was small. And my loss was very manageable. So you'll learn everything that we do here. There's a slew of predictive indicators that all of our indicators predict volume. This is the key part of what we do here. Every single one of the levels that we give you forecast where volume will be. We actually are known as the volume predictors. This is called a DD band. It's one of our risk-based indicators. There's a volume spike there. This is S&P futures. So we can predict order flow. This is like what our technology is designed to do, which basically isolates, you know, your trading day into like just a couple areas of interest. Our pivots here and here. This got crazy because of the selling, so it's kind of buried inside of here, but you'll see volume spikes around each one of our pivots. It's the news that came out today. Right. Pivot. So these are forecasts. This orange one comes out like the night before, actually. So does this one. These actually both come out the night before. They're actionable throughout the whole day, and this is futures. So we have a rule. Let me teach you risk management rules here. Outside the screen band. Class, what's the rule? We sit out. This is an exploit of see me spam, which is a margin requirement thing. Anytime you're outside these green bands, don't trade. So we sit out when those green bands are broken. That's what you see me doing right now. Just let the market be stupid. He just says his buddy works at Port Newark. A couple days will sit impacts. 1 week we'll really begin to see it and feel it, and beyond it gets extremely bad. Rich actually took the short scalp after the news. Nice. So today's the day where bull structure fell apart, and when bull structure falls apart for a day in a really strong bull market, we just let it fall. That's usually what I do. On that note, let's call it. Here's a quality of life improvement. Drink a lot of water. I used to not do that. Drink a lot more water these days. My friends, don't forget, contact me to move your legacy account to the new site. Because the day we shut it off, there will be thousands of people that are freaking out because they didn't do it. And now trust me, that day will be pandemonium for you as well as me. Don't procrastinate on it. Don't be like, oh, let's do it and then forget. Do it now so you don't forget. One day you will wake up, you won't be able to log in, and you will send messages to tech support, and so will 1,000 other people. So as I'm shouting at you every day, move your membership over. Move your membership over. I will shout at you and annoy the fuck out of everybody for like another couple of weeks. We have thousands of people that need to relocate. Relocate. It'd be so easy if we can just move your membership over for you. But then there's a legality of we can't charge your card for you. You have to run your own card and buy your own stuff. So it'd be nice if I could just push a button and then just move everyone's memberships to a new site. But it constitutes as a new purchase from a new entity. I can't go charging your credit card like it's mine. So you all have to manually do it, unfortunately. But don't do it at the last minute. Do it today or do it before you get charged again. Another thing is if you wait too late and you just have to transfer over, we won't prorate. So you get charged again on the new site and you got to go charge the old site and be like, well, I just got charged on the new site. Can you prorate? We won't, I'm not gonna hassle with people even procrastinating. I love you guys, but if you wait till the last minute and it charges twice, our tech support's trying to like prorate everybody because you forgot to do it. We're just gonna like, as adults, let's not procrastinate. We're gonna like it. We're like trading. We're gonna punish you for doing something wrong. You procrastinate, you get charged twice. You didn't plan it. We're giving you months of head start. We're gonna be mean to you. It's a classic app with put call walls going away permanently. It is gone away already. But back to popular demand, you guys want it back. So we may bring it back on the new site. The issue is that, like every other issue is, as CEO, I have to kind of like pull the reins on the company. And everything that we do here has a cost. And we've actually realized when we did an assessment, we've been giving away most of all of our stuff for free. In any other corporate guy would say there's a price to maintain and manage this thing. There's a hosting price and things like that. We can bring it back, but we'll have to put a little charge to it. I'm thinking maybe like $10 or something small. But that puts a pot of money together, which pays for the hosting of said thing and the support of said thing. Because for that thing, there's enough people that use it. It's not just like our legacy app that was built in 2019. So it's our first app. There's no charting. Everyone still loves it because it's simple and light. Okay. Yeah, it's people want to use it as a backup and stuff. So the thing is that what we realize is that we've been overwhelming our development staff and things by supporting a lot of the free stuff that we do. So we have to budget things a little bit better. You know, the world of inflation, right? To make things. You want to bring it on as like a $10 a month or $5 a month add-on. There's enough people that want it. So. What the light app gives you is hedge pressure, monthly hedge pressure, the zones, the ladder code, and then resilience. And will also still require a data feed for resilience going forward, just as well. But as we found out, like our development staff is completely overwhelmed because they're managing so much and it's spread all over. I had to come through and consolidate. I say, you know what? You're right. We have legacy site and then light app and then legacy platform and then marketplace and then marketplace platform and then the marketplace with the vendor side and vendor white labels. Our development team is completely overwhelmed. So it's like we can't make new stuff on the platform that we want to make. Because there's like no more time left. So the goal was the Zoom calls were raising money, which we did. Hire new people, which we did. Then we're consolidating, so the development team has a lot more time. So you guys hopefully appreciate that. Get everybody to a new site, consolidating. Get rid of the Lite app for free, consolidating their time and effort and energy. And I still have to support it, right? Every so often they have to go update some things on the Lite app just to keep it going. It's just like a thing. But it's a fan favorite because we did use it for years. I didn't realize there was as many people using it, so we canceled it. People were like, hey, we still like using it. I was like, okay. Just something nominal. As the main platform is roughly, $111 a month. Make the Lite app like $10 a month. But it doesn't, those of you are like, what's this Lite app thing? It's a very minimalistic version of our platform. There's no anything on it. There's no watch list. There's no charting. There's no anything. It's just a tiny little app that shows where your bull and bear zones are. Hedge pressure is written on there. Monthly hedge pressure is written on there. And resilience is at the bottom. It's super consolidated and was built for mobile. And a lot of people that can't open a charting platform just use it. So it's just like a little app like this. Your resilience is here. Your walls are there. Hedge pressures are written on here somewhere. Oh, written down here, I think. Very basic functionality. There's nothing you can do on it. It just gives you the input. Type in a ticker, gives you the hedge pressure. And the walls. Think about it. In y'all's defense, as we've been building all this stuff, my goal has always been to make it affordable. And all of my friends and colleagues out there are like, why? They're like, I charge $200 a month for my Discord. And I'm like, I charge like $111 for the platform and all this information, tools, education, and Discord comes with it. I'm notoriously on the less expensive side. So, because I wanted things to be affordable for people, easier access, right? Trading is hard. You need to keep most of your money. We're not, we do this to build this platform, and the money we raise goes right back into it. Love what we do. That being said, guys, I love you guys. I call it a day. Remember, this is the one place in the world where you can learn to predict volume. You cannot predict price action. That is random. Famous trader Jim Simons said, the market is nothing but Brownian motion. To predict the behavior of human beings is a fool's errand. And that's true. You can't predict what the stock market's going to do. Up, down, left, right, fugazi, wugazi. It's a bunch of nonsense. But however, there are predictable parts of it. And predicting volume is it. You can use simple math or complex math to simplify the problem to give you a presentation where volume flow will be. That is predictable. That is 100% predictable. As a matter of fact, we fail to not predict. We never fail to predict it. Our levels will produce high volume spikes every time you touch them because they are mechanical in nature. They are a bulk thing that everyone does. It's not random. Everyone delta hedges and options. All market makers are hedged at risk intervals. Things like this are constant. It's a mechanical thing we exploit, which we found to be the most applicable thing. You want something to be as repeatable as possible. Now you still can't predict the direction of the market. You have odds at which historically under certain conditions things happen. So not only do we show you where volume will be, which means this is where the traders are, but we have odds as to which way they usually go at those levels. It's the best you can do in a sea of random. It's like playing poker. It's counting cards for trading. We use volume as our premise and the understanding that price action is random and you can't predict it. That being said, we build our foundation on top of that. Not that our squiggly wiggly lines on the chart can predict which way the price is going to go. I think that's nonsense. If the smartest traders in the world told me that that's nonsense, I tend to believe them because I aspire to be one of the smartest traders in the world. But if I have an infinite amount of places I can play the game at, let me narrow it down to like 2 or 3 key pivots. And then from there, I'm just going to make the bet. My odds are low, I bet small. My odds are high, I bet big. Sounds like what a poker player does. Well, there's a reason the same 50 people are always in the top 50, whether it's a different person that wins the tournament. There's a reason they're pros and you're not, because the way you bet is all the difference between winning and losing, not predicting what card's going to flip over when they flop it. You're presented with the odds and you bet with those